Hello, everyone. I welcome you all to Elixir Trading Academy. On this channel, I'll give you guys free content on how to become a profitable trader or how to be able to analyze the market so you can also make some money. So today, I want us to talk about how to spot entries with market structure. So without wasting much of your time, let's dive into the video. So market structure is all about knowing the direction of the trend. All right. So we have two types of market structure. Sorry, we have three types of market structure. We have uptrend, we have downtrend, and then we have ranging markets. Or you can also call it consolidating market or yeah, market moving sideways. All right. So now let's look at how to identify them. So if something is in an uptrend, we all know that the thing is what's going up. All right. So if we should have an uptrend that we expect markets to go up, come down a little bit, go up, come down a little bit, go up, come down a little bit, go up. So let's say the lowest point is what? Let's say $1, and then we expect the highest point to be, let's say, $10. All right. So let's say price is currently at what, $10, but we started at what, $1. So that makes it what, an uptrend. So when you want to, if you want to spot direction of the trend, you can go to the daily, you can go to the weekly, the 4-hour time frame, or the 1-hour time frame to spot the direction of the trend. So you will know where the market is going or the direction market is moving, and you also want to join to take trades or, spot some entries in the direction of the trend. So let's look at the second one, which is downtrend. Where we have markets giving us lower low, lower high, lower lows. So as you can clearly see, market is what's trending down, trending to the downside. So let's say price started at, we got to $10, and all of a sudden it started what's dropping to, let's say, one USD or $1. Yeah. So for us to be able to spot entries with the market structure, then we need to follow the direction of the trend. Like I said, you can start from the weekly or daily or 4 hours time frame. Or you can also come to the 1 hour to also look at the direction of the trend, depending on how long you want to hold your trade. All right. So once you're able to spot them, then what, you take your entries in the direction of the trend. And the reason why we want to follow market structure is that if we are in an uptrend and we see market going up, down, going up, down, when we take our entry, we expect markets to, go further up so we can also make some money. So let's say market is trending at $1 and you buy at $1. When it hits $10, you are going to make a huge profit, right? You don't want to be selling because that becomes more risky, even though you can take some scalp or can have some clean trade where you can also take some short sells in between. The main deal is towards buy in an uptrend. All right, so you can have a very good risk to reward. And then in a downtrend as well, we sell more than to buy. All right. When you sell, you can hold your trade for a very long time. You can hold for a day or two, a week, or if you like, you can also hold for a month, and then you will be able to have a lot of profits. Okay, so let's look at the third one. Let's look at the third one, which is ranging markets. So in ranging markets, that's where we see price moving in sideways. It is not going up or coming down. It just starts doing its random moves. All right. So in this case, the best option is to ignore. There are lots of instruments or there are lots of asset class on market that you can trade. Let's say if you trade GBP USD, and GBP USD is currently consolidating or moving in sideways, or we can call it ranging market. If it is in a ranging market, we don't want to waste our time. You can go to a different pair where you can trade. Let's say USD card is giving us an uptrend. We can just, join the uptrend to spot some buy opportunities to also make money rather than buying for, let's say, we buy, we get some 10 pips to pull back again, we go up again, 10 pips low. We don't want to waste our time. We all need money. So the main focus will be on an uptrend and then downtrend. So let's see how we can spot some opportunities. So as a price action trader, you can use a whole lot of strategies. You can use trend lines to spot opportunities where, let's say, if your strategy says maybe if price tap 3 times on your trend line, you can take your entry, then look forward to your candlestick formation and your confirmation, and then you take the buy based on what the market structure that you are currently seeing. Or you can also use break and retests to spot opportunities. Break and retest to spot opportunities with what your confirmation, candlestick confirmation. Or you can also use your Fibonacci. You can use your Fibonacci tool to spot opportunities. You can also use chart patterns to spot opportunities as well. So trading the direction of the trend is very, very essential, which I will urge any upcoming trader or any trader to take it very, very serious. You don't just want to jump into the market and then just be buying and selling. You want to know the direction of the trend. And if we are in a downtrend as well, you can also look for your break and retest chart patterns, your trend lines, Fibonacci, and a whole lot. So I want to make this video very short. I don't want to make it very long. I hope you guys understand market structure and then how to spot entries. If you like the video, give us a thumbs up and also subscribe to the channel because we'll be dropping more videos to help people learn how to trade and also make some money from the markets. So Please help us by subscribing. Subscribe, subscribe, subscribe. All right. Okay. I'll leave you guys here and then we'll see you guys in the next one. Peace out.